Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Friday, January the 25th, 2008. The headlines out of Switzerland this morning said Euro rise as shadow of ECB interest rate cut fade with stock support. The news was actually very light today, but there are some interesting observations that need to be made. The dollar slid against the euro on Thursday, even though inflation comments by the European Central Bank officials and strong German business confidence data dashed hopes for a near-term interest rate cut in the Eurozone. An improvement in investors' appetite for risk, following a sharp rebound in the European stocks and gains in the U.S. equities, pushed down the dollar versus the high-yielding currencies such as the British pound, the Australia and Canadian dollar. ECB's Governing Council member Axel Weber said the Federal Reserve's surprise decision to cut its key overnight lending rate by 75 basis points to 3.50 on Tuesday had not shifted the ECB's focus on the Eurozone's inflation, dampening rising expectations that it too will have to cut rates soon. On Thursday, the euro-dollar rose to 147.72, but is currently trading around 146.66. The euro-yen rose to 158.25, but is currently trading today around 156.94. Dollar-yen was up at 107.19 after earlier slipping to 106.94 intraday low. It's now trading currently around 106.90. The dollar Swisses fell about 32% to 108.84, but it's now trading slightly higher at 109.63. Pound dollar rose to 197.79 after hitting an intraday low of 195.00. The pound yen was up to 211.97. The euro has been under selling pressure in recent weeks as signs emerged that the weakness in the U.S. economy was having an effect on the eurozone, fueling the argument for a rate cut by the ECB. Some of those concerns eased slightly on Thursday after the IFO Economic Research Institute reported that the German corporate sentiment unexpectedly rose in January, bolstering policymakers' assertion that the Eurozone's economy can withstand turmoil in financial markets. Eurozone rate futures, which were pricing in a 75 basis points earlier this week, now price in about a 40 basis points for easing this year. They're still looking for their rate cuts. The ECB's benchmark rate is currently 4%. The Australian dollar benefited from the improvement in traders' risk appetite and a surge in the price of gold to $913.65 an ounce. The Australian dollar rose to 88.29 and the New Zealand dollar went up to 76.71. There is little reaction to a report showing that the pace of existing home sales in the United States fell in December to a slower than expected annual rate. Let's take a closer look at the Asian session. The euro and the Australian dollars continue to strengthen and the yen to weaken in the Asian session as risk appetites increase. The New Zealand dollar traded lower as the Royal Bank of New Zealand's Governor Bullard stated the New Zealand dollar was overvalued. Asian equity markets, following a positive U.S. session, have rallied back with energy and precious metals. President Bush, with the backing of Congress, announced an agreement for a $150 billion fiscal stimulus package designed to stimulate the economy. In an interesting development, an unnamed Fed official stated that the Fed had no prior knowledge of Sojan's impending write-downs when they cut rates on Tuesday. The 75 basis point cut was directed at the market's pessimism and to offset the tightening credit conditions. These developments, combined with better-than-expected initial claims, have lowered the market's rate expectations for the next Fed meeting. Today's markets were faced with a very light economic calendar. IMF is due to publish an updated economic forecast later today. The IMF has previously announced that it will be revising down its forecast for the global GDP growth in each of the years from 2002 to 2007. This is based on revised forecast of the PPP exchange rate. Let's look closer at the European session. Given this week's fireworks, the European session was relatively subdued. The dollar was mixed following the trend set by Asia and led by increased risk appetite. The Canadian CPI year-to-year figure was at 2.4%, which was expected. However, the core rate dropped slightly to 1.5%. These figures are consistent with expectations for further easing by the Bank of Canada, as inflationary pressures continue to moderate. That concludes our news for today and for the week. We hope you've had a wonderful trading week. We would like to invite you to come to our website, which is www.succeedinforex.com, and there you can find out information about our Traders Training Room, and also there is a link to our Yahoo forum. We invite you to join us there. Hope we will be able to see you there soon. Hope you will have a wonderful weekend with your friends, family, and loved ones, and may they all be the same, and that you will be joining us next week.